Hello and welcome to the Sand to Pearls Market Commentary, Market Week ending Friday, August 16th, 2013. Market breadth. With this past week's market decline, our bull-bear point and figure ratio fell from 1.72 to 1.35, declining into mildly bullish territory. The total count of securities in bullish or bearish patterns decreased 16% to 2,076. The count of bearish stocks increased 35%, while the count of stocks in bullish patterns increased 6%. The Sand to Pearls P&F Market Breadth Summary Chart shows us a market now 6 consecutive weeks in bullish territory. Paid subscribers have access to the data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking on the Membership tab, and clicking Sign Up. For those who are interested, a free 2-week trial membership is available. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 215 points for the 8th decline in 12 weeks. At a positive 380.35 points, it continues below the July 2013 top, the May 2013 top, the March 2013 top, and the February 2012 top, but just above the September 2012 top, above the January 2011 top, the November 2010 top, the September 2012 top, the November 2011 top, the August 2010 bottom, the March 2011 bottom, the June 2011 bottom, the August 2011 bottom, the December 2011 bottom, the May 2012 bottom, and the November 2012 bottom. For the second consecutive week, the weekly NASI is the highest it has been in 3 years. Market gauge volume analysis is not available this week. Momentum. At minus 60, with 2 days below zero, the CCI 20 daily has now fallen below the plus or minus 50 range for a valid zero-line reject. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 27 weeks ago, while the daily CCI 20 began a Woody's uptrend 5 weeks ago. The CCI 20 weekly got a valid zero-line reject signal for Monday, July 8th open. This week, the CCI 20 continued above the plus 100, though declining. We will continue to follow the results of this trade simulation in next week's commentary. Industry rotation the last 2 weeks. 3 of the top 5 industries are positive, and all the bottom 5 are negative. Bullish computer hardware continues in the top 5. Comp Tech has entered the top 5. Bearish REITs continues in the bottom 5. Gold and silver leads the top 5. Oil services have left the bottom 5. Networkers has left the top 5. Disk drives has re-entered the bottom 5. Oil has left the bottom 5. Focus this week. Correction. Rumors of a Chinese gold standard are overblown. CPM's Christian and author Jim Rickards. Quotes from the article, and here's the first. In an interview with Kitco News, Christian explained that it took decades for China to distance itself from the gold market, and he doubts its government and central bank would readily return to it. Rather, he feels that China's intention is to be part of a new global currency reserve. Point number 2. Rickards echoed this. China is not buying gold to create a new gold standard. Rather, it is aiming to make the yuan more attractive, with the end result of being included in a basket of currencies referred to as the special drawing rate. He added, there is a move to make the SDR the new global reserve currency. Point number 3. Because of expected weakness in the US dollar, Ricards is more optimistic of a global currency basket. However, before China can get there, the country has to diversify its assets, which means buying gold, he said. Point number 4. The two analysts also agree that expectations the yuan will become a reserve currency on its own are extremely overblown. Point number 5. Christian said he doesn't think the central bank has bought gold since 2009, which is the reason why its reported gold reserves have not risen since then. He added that he suspects the gold that is being bought is for the Chinese Sovereign Wealth Fund, China Investment Corporation, which is buying the yellow metal to diversify and protect its investments. And the last point, Christian added that the Sovereign Wealth Fund was created to help build infrastructure within the country, which will eventually be a better way to stabilize the yuan and make it more attractive in the global marketplace. With that, we thank you for joining us for this week's market commentary, hoping that you are passing the weekend in a pleasant way and that you have a great week coming up. Happy trading.